Once again, thank you all for joining us today. Without further ado, it's my pleasure to welcome to the NinjaTrader webinar room, Mike. Go ahead and take it away there, Mike.
All right, so I'd like to welcome everybody today to the fifth MBoxWave webinar. I'm done with NinjaTrader, and we're actually celebrating 10 years of MBoxWave this year, 10 years of giving traders an unfair advantage. So that's kind of just a quote I wanted to say because we're giving an edge for the markets here, and I'm very excited to be here today. Got a lot of material to go through. For the new people, I'd like to say to stick around because I'm going to have a nice anniversary offer for you guys. So I'll just jump right in. Today's topic is the Trump card, tariffs and trade wars. There's a lot been going on economically and politically that's been affecting the markets, and I'd like to show some analysis of how that has played out here. So let's go to the first slide here. We've got the Trump tariff market crash. So I've got up a chart here of the ES, E-mini S&P futures weekly chart. And here I've got the title, Did MBoxWave Forecast the Market Crash Triggered by Trump Tariffs, which led to significant sell-offs? And I have the answer, yes. So here we have an interesting chart here, which shows the last 2 years of the market trending up in the ES, and so we've been edging up here and here, and shortly after Trump took office and announced the tariffs, we had this market dive, go down here. We had a market collapse, but markets were starting to edge up and slowly slow down as they were hitting the higher highs. For people that are new to MBoxWave, I'm going to be going through some of the analysis here, and I'll also give pointers for new people of which webinars they can watch that I've previously done that go into greater detail of the indicators as a whole. But let's jump right into the analysis. So here I've got a chart, and I'd like to transition into a markup here so I can begin to show what these indicators are showing. So on the same chart here, I've just got a markup going on, and a few things to point out here from the beginning. So as we're edging up to these higher highs, let's start looking at these numbers, right? So the numbers on the top of the waves, they represent demand. The ones on below the waves represent supply. And so as you can see, we had a big pushes. We had a 461 here. We had a 660 of demand, 249. And as we're getting to these higher highs, we're getting a drop. We got 85, 85, and then we went to 18. So I have here written plus 18 demand is the weakest we've seen in 2 years. So this in itself signifies a change in behavior. And when there's a change in behavior, we're actively looking for setups where we can get in to potentially, gain an advantage. So let's look at some other things here. The MBox histogram here, what it's doing is it's showing the buying and selling in these blocks, right? So we can visually see, how much buying and selling effort there's going on. In the cumulative delta, we have overall buying and selling. It's similar to the MBox histogram, but the cumulative delta is showing more like accumulation distribution. X pace here we've got is showing the pace of the bids and the offers. And so let's look at the MBox histogram. We've got a huge buy box here, which pushed price to go up here, and it was coupled with the big demands of 461, 660. As we're edging up, we see it kind of flat line here. You see a horizontal arrow I've drawn here because we're not seeing large continuations of buying blocks. And as we get to the top, we see this very interesting analysis here. We just see an absence of buying. We don't even see like any even small boxes. They're like gone, you know. So this is really interesting because at the top we've got the 18 of demand, which is almost nothing, and we've got an absence of buying. Total change in market behavior. And as the sell-off begins to happen, we get here an arrow. This is the most amount of selling we've had in 2 years, right? It's more than the push down here. And I'm going to get into this bonus a little bit later, but so as this move begins to happen, price begins to drop, right? We see a crossover in the cumulative delta to overall selling, right? And then I have a bar here as this climactic, so I'll get to that in just a minute. But I'd like to point out here, as we reach the higher highs, we've got some algorithms firing off. We've got a cluster of sell signals at market all-time high, which is also, warrants taking a look at this chart. We've got this minus 155, and I have a question marks here. And that's kind of like, get you guys thinking, what's going on here. The last big supply we saw was minus 317 here. And, now we're getting a little bit more here at the top. So this is a classic change in behavior since we've got, the drop in demand to the 18. Then you got the minus 155 supply is coming in. And then bam, we've got a drop. This bonus here real quick, effort, no result because we made no new low, but we spent more supply compared to the minus 75. We got minus 317. So that makes an effort, no result. Another thing, we've got a red box here coming down, which corresponds to this selling block here. It's kind of a short box, right? Take a look at this box here and take a look at this box here, right? And this one is almost twice the length. Similar amount of selling, a little bit more, but here relative to how much this price moved down this box and the selling that happened, it looks like too much effort was spent on it. And then you have the effort on the supply side and price springs up. So the question is this climactic here on this bar? And I'd like to go down a little bit further and show kind of what happened in the couple weeks after this climactic bar happened. As the price came down, selling contracted in the MBox histogram here. You can see that. And what's interesting is we had a huge amount of pace of bids here. And look at the selling, it's drying up. So the overall selling is increasing, but at this box, at this price right here, selling is less, right? Yet the bids are flooding in. So this is divergence, right? And so this is a tradable setup right here because the speed at which the bids are coming in and the amount of selling that we have at the low is very little for the amount of bids that's coming in. It's a climax. This setup can be traded. All right, so let's move on to the next slide. There's still a lot to cover. All right, for the new people, welcome to MBoxWave. I'm going to go through this quickly. I've got a quote here. Trading isn't about chasing every move. It's about the discipline to wait. The best setups speak loudest to those with the patience to listen. So with MBoxWave, we're all about catching quality trades, finding the reliable edge. We're not looking, to trade every single zig and zag up and down. We're looking for the strong, reliable, consistent setups to capitalize on, right? The goal is to stop forcing trades, allow the markets to tell you what to do next, and that opens the door for consistent, reliable results. So again, I'd like to reiterate, there's going to be a 10-year anniversary discount code provided at the end of the presentation. It is going to be the biggest discount I've ever given, so stick around. Quickly, who am I? For the new people, I'm ex-Silicon Valley software engineer. I am the sole creator, developer, active trader of MBoxWave. Trading community knows me as MBox Mike. So the good thing is that since I'm the only person that's really been involved in the system. I know exactly how it works. I programmed it. I trade it myself. I teach others how to trade it. That's the best learning experience you can get directly from me. What is MBoxWave? It's a complete order flow trading system, tracking supply, demand, buying, selling, accumulation, distribution, speed of bids, offers, control of bids, offers. We expose optimal entry points via algorithmic buy-sell signals. MBoxWave is an entire community, and I've got a Discord trading room as well. So the goal is to, provide the best technical analysis that exposes market flow, supply, and demand. And again, we got the whole community of the MBoxWave traders. So let's move on to the Liberation Day. This is where things start to get exciting, with Trump's announcements and the tariffs and what has been going on. So preceding the infamous Liberation Day, there were a lot of bearish signs, right? If we pay attention, we can achieve favorable results. So Liberation Day was April 2nd. I've got my arrow pointed here, right? And non-coincidentally, we get even a nice sell imbalance here of -1. So what does that mean when we see a minus on top? It means there was more selling on this while price moved up. So the smart money was beginning to sell here, right? But we had a whole sort of setup going on before the Liberation Day. So we are basing our analysis off of, technical analysis. We know that fundamentally that there were going to be some news. It was not favorable anticipation of these news. They were shed in a sort of negative light, and people were waiting for, something, not so good. But before that, we had signs, bearish signs. And so that's what we're all about with MBoxWave. So the easiest thing to do is to look at the visuals, right? So we look at the MBox histogram, we can see that selling is expanding. We are getting boxes that are becoming bigger, right? And we have a huge sell block here. We don't really see expansion of demand. In fact, even after reaching, say, this 47 point, look at that, the buying is really flat, right? And we even had sell imbalances here, even right before this move happened. So we're looking at these dots now on top. These is the X control for the people that don't know. The big ones showing total bid control. I talked about them extensively in another webinar, but we've had 1, 2, 3 total bid controls. They correspond to the X pace, which is the speed of the bids. So what we're just seeing here is a setup where an overly bearish picture is beginning to be drawn, right? We had a overall distribution here, the bids outpacing the offers in the X space. We have the huge supply of -479 here, and this is pre-Liberation Day, right? And I'm going to talk about exactly how I traded Liberation Day, which is probably what everybody wants to know. Exactly how did I trade the anticipation of leading up to this Liberation Day? So I call this pre-Liberation Day, right? Because this is what has been happening before the -1 sell imbalance. So let's take a zoom in. So we're still going to remain on this chart, and I'm going to transition to the slide called timing the markets. Right, so same chart, I just zooming in to show exactly how I traded this setup. So we knew Liberation Day is coming. Liberation Day happens here, right? So I traded this a little differently than before. So mostly I'm a futures trader. I have traded options, stocks sometimes, and I've started also to dabble with leveraged ETFs. And in this case, I had the bearish picture, right? Liberation Day, the whole bearish picture here. And I thought, okay, I want to do a bearish play here, but I don't feel like timing it exactly, right? So I bought the inverse NASDAQ ETF after I saw this double algorithm, the pullback and the -35 sell imbalance. My exact entry was at this price at this red line where the arrow is pointing. So, it happened, more than a week before Liberation Day. We were in anticipation. I didn't want to miss out on the downward movement, nor did I want to feel like timing it exactly, which is what I typically do in all my live trade videos. I time the entries exactly and I show exactly how to do that. But this, I employed a little bit of a different kind of strategy. So I bought the inverse NASDAQ, the S triple Q here. Liberation came and bam, we crashed down and I exited. I exited exactly at the close of this bar. So I capitalized, my entry was about 20,000 something and I got out about 17,500. So I made over 2,500 points on the triple leveraged inverse NASDAQ. So that was a pretty good play. I did pretty well on that. And I exited on this bar. I thought, okay, it's good enough for me. Why? Because we had the climactic action here. The climax, the X pace beautifully showed that. We had a total control of the bid dot here, coupled with the climactic histogram of the X pace. So I thought, okay, I'm good. I'm done. Another thing I'd like to point out here, right here is April 2nd, as we're going up to the liberation date. What do we see here in the MBox histogram? This is a bonus, right? We see not only a sell imbalance in the wave -1, we see a sell imbalance in the histogram here visually, right? So if the blue box is below 0, it means that price moved up, but there was more selling. So what does this mean? In this case here, it means the smart money. See, it was a really compressed up movement going in this box. The smart money was selling the heck out of this move up right here, this 3-bar move up. They were selling the heck out of it. So that's what the smart money was doing. So that's another clue. That's another clue of this short play. So yes, ideally, actually, the ideal and perfect entry would have been at exactly Liberation Day and seeing this MBox histogram sell imbalance. But I didn't have that knowledge when I entered here. But that's okay. I didn't need to time it exactly, right? And so that's why I was utilizing the leverage ETFs. So as we hit a lower low here, what's interesting that happens, right? And then price rebounds. Why does it rebound? Well, look at the cumulative delta, right? What's interesting is here at this point, we had where my arrow is, we had the most amount of distribution and selling. And as we reach the lower lows at this -135, we actually have less selling on lower lows. So that's got to make you scratch your head. So what that's showing is that this distribution here that was happening is what pushed price lower. And once we reach the lower lows here, we had a contraction of selling. All right. So one thing I wanted to come back to actually on the Trump tariff crash here is that, sometimes people think, should I do technical analysis? Should I do fundamental analysis? And the thing is that I will say that technical analysis always precedes the fundamentals. It precedes the news, right? It's like you see that price was having difficulty going up, and this is December of last year, right? And it's starting to and before the tariffs were announced, price had already begun to slow down. It's almost like the markets already knew what was going to happen. And that's what I see in technical analysis is that price always factors in the news before it happens. So we've got, price inching up here going very slowly. It's like the setup is happening and then the news happens, right? It's not the other way around. Is the technical analysis shows that there's a slowdown and then the news happens and then the market dumps, right? So that's why if people wonder, okay, are we trading, the liberation day based on news or technical analysis? We are trading it based on technical analysis and then the news happens. And then, as price rebounds here, we get a nice big up blue bar here. And we have a huge, huge pace of the offers here, all right, which happened after this climax. All right, so that's covering timing of the Liberation Day. Now I'm going to go into cycles of bust and boom. So this, we've got a lot on this chart. MBoxWave brings clarity to the markets, highlighting early bearish signals, exposing change in market behavior, and forecasting the bullish rebound. So again, here we are again looking at what happened Liberation Day. We've got April 2nd here, what happened post Liberation Day and onwards, right? I'm looking at E-mini S&P 10-minute chart. And what I like to do a lot of the times is zoom out. I like to zoom out on the small time frames. It sort of kind of mimics overall analysis of a larger time frame, but you can get a lot more data on the chart and kind of see overall what's going on without changing time frames, right? So what's interesting here is we had the Liberation Day, right, April 2nd, and we saw from this chart on Liberation Day, we went slightly up. So the crash happened after Liberation Day. We see on the 10-minute, right? So as we're inching up here to April 3rd, right, we see that there's a consistent decrease of buying in the MBox histogram. We had more buying here. Here it's going down, while at the same time we have an overall increase in buying. So that's got to make you scratch your head. What's going on? MQO delta is going up. MBox histogram is going down. Well, what it really tells you is that we've got, well, I wrote here overbought divergence because we've got more overall buying, but less consistent buying. So they don't add up. You would not want to be long. It's a point in favor of, of looking at bearish signs or going short. At the same time, we got this huge push down. We begin to see in the X pace, we got to push down. The bids are in control. So this is what we see. Again, the theme is Liberation Day. Now we're looking at it zoomed out. And what happens next? Markets begin to tumble. We enter this zone here. I wrote only sell signals. If you look, we see a lot of these pullbacks, stooges, which are the hash marks. Going all the way down, we did not have a single buy signal. So the algorithms, the MBoxWave algorithms did a great job here of filtering out any buy signals. We didn't see any. It was sell heavy, and the indicators reflected that. We see here in the MBox histogram that the sellers are in control. We've got expansion here of the MBox histogram, and we've got expansion of overall selling. So the consistent selling in the MBox histogram, overall selling expansion in the cumulative delta, it adds up. Unlike here and here with the buying, it didn't add up. This adds up. Markets tumble down. All right. The next section, we see a change in behavior, right? Where we find our low, then markets retract. They kind of make a correction here. What do we see? We see selling contracts in the MBox histogram. We see the selling contracts in the cumulative delta. We see buying arrives here, and buying arrives here in the MBox histogram. And we see a huge push up. Offers are in control, right? We see them that they are in control, and a huge push up. Does it mean that you are to get into a long position immediately? Not necessarily. I mean, if you were playing an inverse not an inverse in this case, a leverage ETF on the long, certainly you could have played this position here with this huge X pace of the offers. You could have bought the TQQQ somewhere around here and capitalized, when it pushes up here. But if you're looking for optimal entries, I talk a lot of those in my live trade videos. In this case, the next cycle, we see this bullish rally. But what's happening here? at these lows. We don't make a lower low, so we found the lower low here. We see a cluster of buy signals. We begin to see that buying expands, both in the MBox histogram and the cumulative delta. We see selling is exhausted. And what's really nice, we get a really nice setup here because selling is exhausted right here, right before this push up happens. We see this. We see that there's an attempt to sell, right? So we've got this attempt to sell right here. Clearly in the MQ delta, we don't make lower lows compared to right here. It's not any lower. And we begin to see offers in control in the X space, which is good. And price jumps up. So let's move on to Confluence is king. I always talk about, you want to look at the indicators working together and seeing that they agree with each other before taking a trade. That's the best way to achieve consistent results, is to make sure that the indicators agree with each other, because there is not one indicator in the world that will tell you what to do, right? The best chance you have at making a good high probability trade is when indicators agree with each other. You read the story of the chart. That's what I've talked about throughout, the last 10 years. This is an example of, a day trading, setups. These are the kinds of trades I take, on a regular basis. We're looking at a 1-minute chart of the E-mini S&P. And, the first thing here we can see and notice before looking at anything, if, people want things to be simple, I have here sell signals dominance, right? How many sell signals do we got? We got 1, 2, 3, 4, 5, 6, 7, 8. And we have one buy signal. So we got 8 to 1. So even if you don't look at any of the other analysis, having so many signals, is indicative of a bearish sort of conditions, right? And that's what we have here. So let's look at the visuals. So MBox histogram, we see selling is expanding. We see we've got these, it's expanding here. Selling is expanding here. We got a huge selling block here, right? What's interesting here is what's happening with the demand. We've got demand drops, 155, 115, 48. We get a nice up thrust plus stooges here. And at this higher high, what do we see? Buying drops on higher high. In the MBox histogram, it's reflecting that there's less interest in these levels in the higher high, right? We've got the initial distribution, the cumulative delta. Here I wrote divergence overall buying, but no consistent buying, because look at this. We've got overall buying here, but at this point, there's no consistent buying in the MBox histogram. This is a divergence, right? So this becomes a tradable setup. Here we get a triple algorithm. I've talked about triple algorithms a lot before in other webinars. That's when we've got 3 algorithms firing off. Here we've got a pullback, stooges in a trend, and a sell imbalance of minus 21, right? So even if we would have traded this here and based on nothing else, the trade would have worked out. In fact, all the signals that I circled here, these 5 ones, the trade would have worked out even if you didn't analyze anything else. And, so we had a lot of good degree of confluence. We see that buying drops, demand also sort of evaporates. We get the triple algo short. We know that we are bearish. That's an entry right there. Throughout this whole picture, we see X-Pace bids are dominating. We get this 203 here. I wrote demand, 203 demand, lower high effort, no result. Why is it a lower high compared to the 37? It spent a lot more. We couldn't push a higher price, but we spent a lot. And we spent a lot in buying. And we didn't achieve that higher high that we needed. And then we got the huge selling block. Absolutely huge. So even if you wait for these huge selling or buy blocks, you'll see that typically they tend to push price. We get a nice double algorithm here. Huge supply, minus 765. That's just beyond anything else we've seen on the entire screen. We get a double algorithm here, followed by plus 13, no demand. It's a very low demand. Effort, no result on the 55. Why? Because it's more demand than the previous wave, but no new high. The next wave, you get a plus 112, even more demand than 55 and no new high. So we've got two effort, no results back to back. And we see continued selling dominance in the MBox histogram. So, this was very tradable chart here, very bearish. All you had to do was follow the signs. The more signals and indicators align, the stronger the confluence, and that's what shifts the odds in your favor. Giving you the edge to strike with high probability setups. So I've done a lot of analysis on these kind of charts and in previous videos. So I want to talk a little bit about automation and strategies here. So I get a question a lot of times, can MBoxWave be automated? Yes, MBoxWave can be automated, can automate it via the API I provide, Bloodhound, Blackbird, NinjaTrader strategies. What I show in my setups and how I trade is how I trade, but some other traders trade MBoxWave differently. It's just so the whole system and indicators and signals so feature rich that with a little imagination, you can create your own strategies with high probability setups. A lot of people have done that in the trading room. I've got on YouTube over 100 plus videos, including webinars, recorded live trade videos showing the methodology in action. It's a perfect resource for ongoing learning and trade ideas. And a bonus here is that there are a lot of member shared strategies accessible in the MBoxWave trading room, available for free. There's a lot of collaboration that's going on in the Discord trading room. You could tap into that, and access that for free. That's included. If you're interested in automation, highly recommend to watch last year's webinar, which I presented, called Semi-Automated Algorithmic Trading, how to set alerts so that you can put alerts on different conditions. Look at the screen when something fires off, when a triple algorithm fires off, springs or up thrust in a counter trend, or double algorithms. I've done since then, I showed mechanical strategies. I had the springs up thrust mechanical strategy that I presented. That was a strategy where you don't need to even think. You execute based on hard-coded rules. That this strategy did pretty well. People even coded this strategy in the trading room and shared it. I also had a mechanical double triple algos strategy. Also, people had coded this in the trading room, had shared it. So there's just a lot of, I've got 20 webinars in this channel. This webinar, the 5D order flow webinar I did 2 years ago, I highly recommend people that are new to watch this, because this is a good breakdown and overview of, I talk about each indicator individually in this webinar, and kind of it's a really good introduction to MBoxWave. So highly recommend watching those. And the list goes on. And then you'll see that there's also live trade videos. I've got 82 live trade videos, so it only grows every year. I did a video here post Liberation Day, how I traded that market volatility, because a lot of people were questioning, how do you trade the volatility? In the end, the markets are markets, right? And our goal is to expose what they are doing with the technical analysis that we have. And that's what we're doing with MBoxWave. So it's not unique. We've had volatility before. We had volatility with the COVID crash, with the pandemic, and all that stuff. And this is just a repeat. It's a little different, right? Markets don't completely repeat, but they do certainly rhyme. All right, so let's move on to trading and education. The website reads like a book. You can read about all the indicators, algorithm strategies. I've got over 100 plus videos on YouTube, live recorded trades. There's the trading room, ongoing learning. Subscribe to my Facebook, Twitter, X, YouTube channel. I regularly post new content online. I'm always say repetition is the mother of all teaching. That's the best way to learn and become consistent. So a little bit about the trading room. Um, if you join, you be a part of the MBoxWave community. It's available to everyone that gets the grandfather package. It brings everybody together. We chat, discuss analysis, share screenshots, gain experience. People share their strategies. People share that their successes in getting funded. I've had a lot of that. I've posted a lot of that on Twitter or X. It's just you get to interact because if you get a system, you need to be able to interact with people and learn. That's the best way to do it. You don't want to buy something and be left on your own. It says basically what I provide is exactly what I would have wanted when I was first starting out. So I know exactly what is required, for a person to begin their path on trading. So let's get into, we're reaching the towards the end of the presentation. In light of the 10-year anniversary discount, I'm going to give the biggest discount I've ever given on MBoxWave. It's good for 24 hours. You'll get the grandfather package and the MBoxWave trading room. So for people that are new, let me go briefly. What exactly is this package? So if you go to the MBoxWave website, you click on the purchase, and let's scroll down here and look at the grandfather package. You'll see all the indicators that are included. You're getting all of the signals, the three stooges, efforts, result, pullback, springs, up thrust. You're getting the training education. You're getting the trading room, the live trade videos, recorded webinars, and you're getting lifetime support. You get a lifetime license, lifetime support, you know. So normally, the normal discounted price is $16.99 here. And what is the discounted price? Well, let's get to that. Let's get to that now. So this is a one-time 10-year anniversary sale. You get an extra $400 off. This is the biggest discount ever. Is going to be extremely limited time only, like I said, 24 hours, and you'll get it for $12.99. So you can get the grandfather package here for $12.99. You go to get the discount, MBoxWave.com/offer. So let me actually post that into the room here. So if people need the link, that's what it is. So if you do decide to join, I'll be happy to see you in the trading room. MBoxWave is a very live and actively developed product. I still have plans on doing stuff in the future. I've been releasing features here and there throughout the years, and the community has grown stronger also over the years. So, if you're looking for a trading system that basically will lead you through the way of learning how to trade, MBoxWave is something you can consider. But one thing I do recommend you to do if you do trade something, pick a system and stick to it. A lot of times, people try something, don't really learn it, and then they give up and move on to something else looking for the holy grail. There is no holy grail. Okay. You got to stick to something and then repeat it and be consistent at being disciplined about it to reach success. So if you have any questions, I'll be happy to answer them. I've got one question here. Where would your stop loss be? Well, I'm not really sure which slide you're talking about. Perhaps you can clarify the one with the line on it. This timing the markets. Well, like I said here, I did not play a stop loss. Actually, I bought into the inverse ETF, and I was in anticipation of some kind of down move. So I use the leverage ETF as an instrument to not time the markets exactly, right? So that was my strategy for this. There's lots of different ways you can trade for exact entries and so forth. I talk a lot about exact entries in my live trade videos, uh, down to the tick. Usually I enter below or above swing highs and lows. Sometimes I enter above or below bars. Sometimes I adjust risk based on ATR. You know, these are all risk to reward strategies. I employ different risk reward strategies that I talk about. Mainly, I have three. Um, and you know, if you join, I talk about those. Let's see, keep up the live trade videos. That's a training weekly charts. Live trade videos, yeah, I'll keep them up. Trials, I don't do trials just because I get flooded with them. And realistically, I don't have the time to support trials. I'm a one-man operation. Either I'm trading myself or I'm supporting existing customers and making MBoxWave better. It's really not the best use of my time to support trial customers because that would get into the um, dozens. I get usually dozens of requests a week for trials. It's just not worth my time. The trading room is open 24/7. Um, there's always people in there, so you know you can always access it. Is there any history of signal success rate somewhere? Yes. Feel free to go to my Twitter X page. I posted strategies that people have used and their results, and also posted some back testing results on there. You have to keep in mind that you know back testing is also depends on your risk reward profile, right? It's not something you just set and forget. You need to manage your risk. Everybody's risk is different. There's not just you click one button and off you go. No, if you employ some automated strategies, it is recommended to you know figure out a risk management that works for you as well, and adjust that. You know, you'd want to test it on different chart types. Some people want to use tick charts or range charts or volume charts or time charts. You know, it's not a one size solution fits all, but MBox Wave is rich enough where it allows you to explore many different options and many different ways of trading. Let's see. I've been trading this for 2 years. It has gotten me funded with profit firms and videos on YouTube. Have a lot of info. I set targets and get out. Do not overtrade. Yeah, that's an excellent way of trading. So we've got here current member Herbert, and that's usually what I do. I set my targets, and I don't like to adjust them. I get asked a lot of time, "Hey, Mike, how come you don't want to adjust?" You know, because the more you adjust, typically, the more it becomes a problem. So I found that it's easier to be consistent by setting your targets, your loss and your profit, and leaving it as is than adjusting it. But sometimes I do exit earlier if there's a huge change in technical analysis. So anyway, I think we are reaching the end of the presentation. So I hope you guys enjoyed it. And thank you for joining me. If you have more questions, you know, feel free to get in touch with me through the website or the contact form.
Would like to remind everyone here today that the information provided was that of MBoxWave and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at the NinjaTrader ecosystem.